I can see you.
What's up, boys?
Wow, Greg without a hat on. You actually have hair.
What do you got there, Ash? Who you repping? Who you repping today?
I got my Deacon Lumber shirt, Gone Fishing shirt, my retro 70s throwback Deacon Lumber shirt.
Okay. I mean, so like people know that they can send us swag and we'll shamelessly promote for them.
Yeah,
sure.
Yeah, definitely, Ken. We should put on Twitter our channel shirt, our show shirt, and sell it and click on it. Okay. So yeah, how are you guys? Are you still down in Naples, Greg?
Yeah, we're getting ready to close up shop. Head north.
Right on. Sounds great. That sounds great. Well, I'm
looking forward to Chicago and another 30 days of winter.
It comes and goes, man. I mean,
I saw that 80 one day and then 39 in snow flurries the next.
Yeah, it's been
that's
that
fun.
way, but
that's fun.
It's but you know what? In Chicago, 50 or 60 degree weather is shorts weather.
Yeah, no, that's right. Oh, yeah, no, it's beautiful today. Feels like 41 up there.
I'm trying to get my Outlook going, so I had to write down what my Outlook except Microsoft. Somehow I lost the code for it, so it's not letting me in. And you know how you just get pissed at something when here's my problem with any type of self-serving and technical support on anything, an app. They make it sound like it's so easy to fix it. And then a half an hour later, you've gone through and clicked and pressed and prodded and nothing has changed on it. And it's somehow it's supposed to be easier. So maybe AI will fix that, right?
Yeah, right.
Yeah. But look it's a great show. You guys came up with some great ideas. Greg, Matt, I know you guys were sending stuff back at the agenda. So a couple things to talk about: new home sales, existing home sales, prices. Matt, you and I talked about it yesterday. Greg, you and I talked about it. Last week's housing number, I have single versus multi because that's one thing that we keep forgetting about is single versus multi, right? And that relationship, how it always has been and where it's at now. Western U.S. flow being better. Matt, good point. Home center business higher than normal this time of year. And then we'll talk about futures being off $70 1,000 because I'm on social media looking at stuff today and kind of some non-lumber people are looking at that as a precursor for housing prices selling off and housing stocks selling off. And housing, that's another thing. Housing stocks are kind of at, Greg, yearly all-time highs?
Currently, the ITB is, it's within, I don't know, it's within $7 or $8 of its all-time high. I mean, it's up 18 on 55 divided by, it's up 30 something percent from October low.
Is that good?
It's not bad. It's not bad.
Greg gets the joke. We used to have a guy that we worked with. We used to have a guy that we worked with, Greg and I, at Block. And when he would sell something and put profit in it, he'd walk up and get this close to our face, and he'd go, "Is that good?"
Was that the same guy
every time?
Oh no, that wasn't. I remember the guy that was able to turn a winner into how he said, yeah, so I diverted this car to a guy, I sold it to him and made $5 and I bought a new car and lost $20 replacing it.
Yeah.
What?
Yeah, and then you're like, let's
that takes real skill to turn a winner into a loser.
Or I bought 50 trucks of this. I sold all the premium blanks out, and I've got more, but my guy buys a lot. We're like, what? All right, so let's jump into
enough frivolity.
I'm thinking all over. So I'm going to start it out like this. as Matt and I were talking yesterday, we started out talking about Euro and SPF because that's contract related, right? And what we're seeing here is the markets, if you are not in the business seeing futures sell off, we had convergence today or yesterday, you could arguably say. So you had futures correcting to worship. Does that sound right?
Yeah, we're a little early on it, but yeah,
we're early. But as long as it happens within a month,
it's close. That's for sure. Yeah.
So we know that. We know there's some gals that sell Euro that have drawn a line in the sand, at least to some, and they're not going to sell below. And then there's some that are going to sell. So everything bought over the last few weeks from the information I could garner, and as Matt rightfully pointed out and showed me, to back out freight to make it equivalent to Prince George, where the old contract was, which is still May, it came up to about a 335, 345 mil base on Euro.
Which is interesting. That's where January and March expired.
It's great point. So, and like Matt's like, oh, that's interesting. And then Matt goes, 2 weeks ago, I was paying in the 330s, 340s. And as Matt put out rightfully so, I got a note from yesterday. Matt said, good fighting wood now is around 355-ish. And does that sound about right, Matt? Maybe it's higher today. I don't know.
I don't know that they're actually getting enough action at 355 to, based with what futures has done to them in the last 72 hours. I think that they're probably listening again, right? So but yeah, they did try to firm their numbers up about $20 as the futures market rallied from 370 up to 420. And now that we've gone from 420 back down to 350, fairly quickly, I think that the bloom is off that rose and they're just folding the towel at this point.
That could be, so, and then a little bit higher on Betterwood. So we look at that, and I think going into Montreal last week, people were kind of bullish. That's one other thing we wanted to talk about. But after I heard, how Greg, Matt, we all, when we go to these conventions, since none of us drink, we like to ask questions of what the consensus was and what the feedback was, right? And the feedback I was getting from everybody is not real bullish, but going nowhere special either. There wasn't, it came out kind of like blah, right? Which means there's something potentially going to happen. But it also, everybody thought going into that on the board, CME board, which we don't talk, there was a lot of shorts that were pressed, and it wasn't the shorts that were pressed. It was actually some of the long industry guys that are pressed that got a roll. So now we're sitting where we're at today. We've talked about cash, futures. Matt, you and I talked yesterday. I think we can kind of say even the best producing mill in BC, or probably anywhere in Canada, isn't making money on a car right now or a truck when they sell it for most items. Am I wrong on that?
You saw Fraser's earnings. They lost $42 million in the first quarter, and we had higher prices in the first quarter than we have right now. So
did you look at the breakdown between Canadian and U.S. Operations, or did they not break that out?
I didn't look. I just saw the headline, and I was surprised. I would have thought that they had made money in the first quarter, not lost money. So I'd actually have to analyze that report a lot closer than I did. But I would think that they were making money on their OSB and their Yellow Pine holdings, and the headline said they lost money on lumber and engineered wood products. So, But point is, you're right. There's not a mill in Alberta or British Columbia that's making money at 335 or 350. I mean, they're not. It's for several reasons, but Russ Taylor has made it clear that's BC particularly is the new high cost producing region. So they've gone from in 2008, 2009, 2010, the lowest cost producing region to now, 15 years later, they're the highest cost.
Yeah, that's a good price. So let's look at new homes and existing home sales. Since
I'll just Greg, before I do that, I just want to, we didn't have a show last week, and we did have March housing starts come out.
Correct.
and they were at 1.42 million pace. Single family was up 2.7%. Permits were at 1.4, and single family was up 4.1% from the prior month. And I think, if I think back, 6, 7, 8 months from ago, I think there was a lot of talk that we were going to be down at a run rate of like maybe 1.1 or 1.2, and so being now at a run rate through the first quarter of a million of 1.4 million, is obviously that's a lot better pace than I think everybody's mindset was on. The big number, and I just want to say, hey, who told you? Completions 1.542, and this is we've had a string now of months where completions have been above new starts. We talked about it this time last year where starts were running way ahead of completions, and that was going to have to change and reverse itself. So the positive effect on that is creating more supply of new homes for the marketplace, which is translating into new home sales, which came out yesterday, up 9.6% in February, 683. They were only down 3.4% from a year ago. The month's supply 7.6, which is that's there's plenty of new homes available on the market now, which is driving down prices. Matt, to your point, I know you'd sent something out. Sales in the West were up 30%.
So, a question: so, is it driving down prices of new homes?
Yes.
Yeah, because if you
this is something that we should talk to, the Brain Trust in DC about supply demand. If you want more of something, if you want a lower price, you create more of something, not less of it.
The other thing is that if you're a buyer of a home right now,
Matt didn't catch that.
I'm just.
He just chose to ignore me.
No, I think he may be walking into this one.
He does that to me. He just ignores me.
Sometimes I do. I just don't want to. I don't want to anger some of our constituents here, so I just let it go. But I will say
that's
that
right. You need to be protective because you live in the People's Republic. That's right.
Well, no, I'm going to say something that's a little political right now about what you just said. And here's an example of Portland. Okay, I'll use Portland because I live here. But if you're a first time buyer in the Portland metro area, and you're seeing with your own eyes what's happened to the city of Portland over the last 3 or 4 years, and what the value of real estate is for existing homes in Portland, around $300 a square foot, and what the tax rates are if you live in Portland and Multnomah County versus going out and buying a starter home in Wilsonville, 20 miles south of Portland, in a different county, I guarantee you're going to buy the new house in Wilsonville unless you absolutely have to live in Portland for some reason. Well, based on Oregon losing 10,000 people last year for the first time in 40 some years, we went down in population. I don't think anyone feels a desire to go pay a premium to live in the Portland metro market anymore. So I'm really glad that I sold my house 2 years ago at the top of the market. I don't think anyone that owns real estate in Portland is happy with what's happening right now. And I think that's more fuel to the fire for these new home builders like Lennar and Pulte and Horton to go out there and keep building more homes and just, I don't know how many lots that they own right now, but good for them. Keep the pressure on because that's where the money's going to move, right? The money's going to move out of the cities into the suburbs. And people want safety. They want a reasonable cost of living. They want to know that the cops will show up at their house when something goes bad, right? And they want, and if you got a choice to live in a 90-year-old home versus a 1-year-old home, I mean, it's no comparison. The quality of the build is just better.
Yeah, no doubt.
Ashley and I are very familiar with population exodus. I think Illinois is the only state that's lost population every year for the last 10 years.
Right.
Yeah, no doubt about it. And to where Greg and I, the area we live in north of the city, to your point, Matt, I was at a couple open houses 2 weeks ago, and it was couples from the city that looked panicked, like buying. I was talking to one of the guys. He was like, "Yeah, we have 3 young kids, and we want to get them in school up here and get out of the city."
Yeah,
And
well,
and which is great for Greg and I because they're driving our prices of our houses up.
It's about time.
Now, are we back to break even yet from 15 years ago, Greg, or no? Are we close?
I think COVID got us back to break even, but it's like it's been dead money for 15 years. That's for sure.
Yeah.
So
So let's talk about
one more. I'll just throw one more stat out because existing home sales came out, and they were down 2.4%. The interesting thing is the prices year over year were down for the first time. I think it was since 2009. When we talked about during the COVID years, we had back-to-back years of 20+% year-over-year price increases on a national basis. And, there's some markets that we're up 50, 60, 80%. And that's also, it's helping with that whole, the whole supply, the affordability issue. There is only a 2.6 month supply of existing homes, which is not true. Because
I know why.
Why is that true, Ashley?
Because every home ever built is a potential existing home for sale.
Correct.
And the reason for
the
that
challenge
is
that we have right now is we've got a lot of people that are locked up. They're sitting there. They've got a 2.75, 30-year mortgage, and they're looking at that. They're going, "Oh, I can't do anything because I don't want to go and buy something and have to have a 6.5% mortgage."
Now there's a hack. There's a hack to that, Greg. If you destroy your credit rating, you can get a better mortgage.
Listen, that's a really good point, Ashley. I mean, that was, this is the kind of, the definition of insanity is doing the same thing over and over and expecting a different return. So the wisdom of, our current administration.
Let's keep it bipartisan.
Go ahead.
Let's keep it bipartisan.
Yeah. I mean, I'm just saying. They've come out and their decision is we're going to charge people with a good credit rating more in terms of insurance so that we can subsidize people with a bad credit rating. And, it just defies any kind of logic how, let's penalize people that have done something good and incent people to have a bad credit rating because then they're going to get a lower price.
And they're not.
You really think that they'll be able to push that through?
If you get a mortgage,
I'm skeptical.
There's a great article in the Journal today about the regulatory onslaught, and the challenge that we have is that we have a government now, and it's bipartisan, Ashley, in that there's all of these agencies that are unaccountable, unelected, that are staffed with a whole bunch of people that promote what their agenda is, which I'm going to go out on a limb and say that we may lean a little bit differently than those folks, fine folks, those good folks.
So, yeah, I just don't think that at the end of the day, some of these policies will be able to last for very long. I think they'll get tossed out by either the courts or by the actual industries themselves, and it's like, we're not going to abide by this. Sorry. But you can try to legislate, but we're not going to follow it.
An onslaught.
If we do this,
it's an onslaught of, idiotic policies to promote things that make no economic sense. And I mean, it just defies logic, but that's the world. That's the current world we live in.
I wanted to jump over to a few things. And Matt was highlight. Let's talk a few things on price because.
And Matt, I appreciate you keeping me within the in the bounds, not letting me leave the reservation too far.
Sometimes I read these things just like you do, and my initial reaction is the same as what you just exhibited. It's like, this is insane. But then what I've seen over the last several years is that there's a lot of this stuff that we read it sort of provokes a reaction, but then in the long run, nothing happens. Nothing really changes. And
Well,
it was a bad idea, and they just forget about it, move on.
part of it is that they float trial balloons, and you see
Right.
how much pushback there is.
Exactly.
And hopefully this is a policy. I mean, if we go back and we think of the last housing crisis, which was created by a lot of bad government policies that incented bad behaviors, and then cost taxpayers a lot of money, and we blamed somebody else for it, right? It was this guy or that guy, this big bank, that, right? I mean, but it was ultimately it was the government's policies that created the disincentives and the incentives to get us to that place.
Yeah, I don't think we want to go back to another housing bubble, honestly. I mean, one of the things that has helped us not have a housing crash here in the last year and a half, 2 years, is the tightness in supply, and the tightness in supply is related to the tightness in credit. These are changes that were made as a result of the previous housing bubble that blew up in our face, and they made movies about, right? So, used to be in 2005 or 6, I bought a house, and, people at the time were doing interest-only loans. That kind of stuff. And they were doing 5-year arms with basically, paying nothing. And then people were buying multiple homes, and renting them out, thinking, we're going to make so much money. Because the credit people, like the mortgage brokers and the mortgage companies, weren't hardly even checking your salary versus what you were trying to buy. It was like
they were called liar loans.
West,
right? It was like no doc liar loans.
Right, exactly. There was all kinds of that stuff going on. And then when the bubble burst, they changed all the banking laws. Now you got to have 20% of your own money before you walk in the door and buy a house.
That's one of the proposals, is to eliminate that. Right?
I understand, but I don't think that adults in the room are going to let that happen all the way. There might be some modifications.
You have so much more faith than I do, Matt. And I love that about you.
Well, let's move on. I just think that's it's like you said, it's a trial balloon. Let's see what kind of reaction we can get, and then they're going to get a lot of
reaction right now.
So it's interesting. I was talking to a friend about this show and about another show I do, and he had a good point. He's like, a lot of people that buy lumber in this industry, and a lot of different companies, and this isn't all of them, so I'm not painting a big brush, are very intelligent, analytical, wise, and love watching to get information on price. And we go down to farther down to the end use level, like the contractors that watch us, they don't need to be told how to pour concrete or do something or what's going on in their business, but they like hearing about the lumber. Then they go to somebody like you, Matt, or you, Greg, because they trust a bigger personality to go then put deals together for them, somebody that's in it all the time. But what they're saying to me is, we like hearing about what you talk about on price and stuff so much that, we listen a lot. We listen to it a lot, right?
Nice.
Butch Green, corporate procurement manager at Stanley Martin Homes. He's going to send me a shirt.
Well, excellent. Excellent. There you go.
I'm going to get you that.
Yeah, that's going to be that'll be an XL. Butch, that's going to be an XL for him.
I'm going to need a double XL. He's been lifted.
Just make sure it's tight. It's tight in the sleeves, so it looks good on the beach.
You have been in the gym, Ash. I love that.
Thanks, Butch. I appreciate that. I will get you. But so what they do is they like listening to what we talk about, and
not necessarily my politics. Okay, got it.
No. Well, no, which was cool, right? And so I guess the pricing thing is, you guys got to walk me off the bearish wall here, because the last week or two, because everybody was coming to me last week, giving me the bullish play. And Greg, you and Matt are really good at this, because you guys do buy inventory, but you manage risk on it too. And and Matt, you trade in an area that's so freaking liquid. I mean, a huge Texas, and you've got such a good customer base that you've built up, and they trust you so much. You're the go-to person. A lot of people, Greg, you are in your area. What do you think on people right now sitting there going, because I know one thing, talking to people, there are projects sold short on multifamily out pretty far out into the year. I could almost say through the end of the year. And last year, 2 years ago, there was this propensity to, instead of buying, I need 4, but I'm going to buy 12, right? And I get it. And we had waves and waves and waves of buying come on. And we saw what happens. Now people are, I have 4, I'm going to buy 2, maybe hold some and just kind of wait on it. What do you think now going into the back half of the year? What's your advice for people on doing that?
Well, I still submit that our market is really is really going to be a supply driven market, not necessarily a demand driven market. And I think demand is going to be steady. We're seeing that. I don't see any of the logistical problems that we experienced last year, right? I mean, that was a big component as to why prices got so high, was logistics. Well, those don't exist anymore. But I just think that until the mills really could drop production below demand levels, that there's not going to be anything that comes from the field that's going to drive prices up 200, 300, even 150. You could get some $100 rallies on news that somebody's shutting a mill down or taking some time off, and we will have summer shutdowns for the Eastern Canadians. I think, as opposed to last summer, they'll probably take plenty of time off this summer, at these prices. So, but I just feel like with the cost of money right now being a lot higher than it was, it's basically triple what it was 2 years ago. So your inventory finance charges are a lot higher. The carrying costs of your inventory from the reload side, if you're paying a reload to manage your inventory, those costs have gone up also. So if you're an inventory manager like me that puts wood on the ground and reloads, your cost of doing business has gone up. Meanwhile, your customer's cost of doing business has gone up too, because he's got 5 yards and he's got to finance that inventory that's in those yards. So what's the incentive for them to buy 90 days worth of wood? If the price of lumber, the last 3 contracts finishes at around $350. So we haven't seen any major movement in 6 months on the futures price. We've had some gyrations in the cash prices, but have they been big enough to hurt anybody? Probably not. So I just feel like the market is going to be plenty liquid. There'll be plenty of plate appearances for people that want to just trade every single day. Don't expect it to be super hot. It's never as bad as you think it is. If futures sells off $70 in a week and a half, it's just, that has more to do with market makeup than it does with actual supply and demand right now. And the reason it went to 420 is because there was 2,100 shorts in the contract, and most of that was fun stuff they were short. They had to get out. Well, once they got out at 420 was the peak. There was nothing left to support it. So now all the longs have to get out, right? And that's what we're seeing here this last week and a half. That doesn't mean anything to do with my cash business on trucks and cars of lumber at all. Completely unrelated. All it does is it just shows you a little woohoo, woo. It's volatility.
Can you do that again?
But I think, with the weather changing here, fundamentally, the weather in the West is improving quite a bit. It's going to be 80 degrees here tomorrow, 76 today. Yesterday was the first sunny, nice day in the year in Portland. Like, literally, we haven't had a sunny day since January 1st. And yesterday, I finally got to go out and do some yard work. So the weather's improving out here. My business in the Western states, not just in Texas, but in Colorado, New Mexico, Arizona, California, Oregon, Washington, all of the Western states has gotten better here in the last 3-4 weeks. It's all simply due to time of year and weather. And I think that will continue. Now, the price of lumber is just stuck until people stop making as much lumber and less euros available. And when that changes, you'll know. You'll feel it.
and I really think, Matt, the markets are more segmented right now than they are, aligned. You've got a lot of, Ash, we've got a lot of dichotomies right now, regional dichotomies. You know what I'm talking about?
I do.
To your point, Matt, before COVID, Western spruce 2x4s had an average annual range of $140. During COVID, we were having daily ranges of $100. Those days are long gone. If I look at the big picture, I look at the market and say we are in a long-term bottoming trading range, and I can look at certain items and I can go, oh, okay, well, in Eastern spruce, studs have moved up $80, $100, $1,000 over the last 6 to 8 weeks. Why is that? Relative demand of multifamily. But the big thing that's affecting the market right now is there's a lot of mills that are running out of logs. And so their production is being impacted by that. And that's going to, continue to filter for a little while longer. Obviously, the other point that we've beaten up is, the flood of euro that came in the fourth quarter. That's holding down the price of that product. As you well know, right now, Euro 2 and better delivers into a lot of markets at a lower price than number 3 and
right.
Quicker availability.
Great point, Greg. I mean, literally, there's Euro going to job sites for number 3 for Canadian number 3,
which is great. The anecdotal information tells us that the flow of European lumber is slowing and will continue to slow as long as we stay at these prices. When do we hit the tipping point? I don't know. I'm going to say it's going to be somewhere in the next 30 to 45 days. And back to your point again, Matt, is summer shutdowns. At these prices, mills are going to make less lumber than they would otherwise. So, I throw that all in the hat and I say, hey, we're in this trading range and you're going to have, $50 to $150 rallies in particular items. And sometimes more. 2x12 yellow pine's a perfect example after all the rain that they've had, and you've seen what that price is. It's up like $350.
Right.
But that's why, the work that we do with analyzing the historical differences between items relative to the hedge and relative to their market basket and relative to the overall basket of wood products is so invaluable. And so my recommendation is for buyers of job sites, there's no reason not to lock yourself in at this point in time. Your risk reward, you're not going to save much, and you could potentially cost yourself if you don't do it. There's just no reason not to do that.
When you say that, when you're saying job sites, let's make sure agreed with you. There's a difference between the price somebody is getting maybe at a lumber yard that the elasticity hasn't kicked in yet, or the inelasticity. You're talking about job siters that are following more close to what the actual market that we deal in on a daily basis.
It's the 1st of May, and May, June, July, August. You know what? Any project that's going to go in the next 90 to 120 days, you know what? Over the next 30 to 45 days, that should all get locked in, because there's no reason, because if we're right and there's more shutdowns and European wood flow slows and some other acts of God, then there's a chance that prices will be higher than they're going to be lower.
Right.
Yeah, I mean, how much lower can we really go, I guess, is what Greg's getting at. And so the odds that we're going to go significantly lower between now and say late September, pretty low. We're, like you said, we're skipping around on the bottom here. We've been skipping around on the bottom for now 6 months, right? If as long as we keep hitting that 350 mark, Prince George, which that region, according to Russ Taylor, went from the cheapest cost producer to the most expensive cost producer. It's kind of weird.
But just
doing
so people,
business is way up, but then the price of their product is still the same as it was 9 years ago.
so everybody understands what Matt means by that. At 350 Prince George, that's about 470 Chicago on a car. Well, maybe 470
450.
Texas on a car. 450. So that's like the equivalent. If you bought that car today, that would be like paying on a 16-footer, a 2x4 16, like $5 a stick. So when you go to your retail yard and you ask them, and they're still quoting you $10 a stick or $8 a stick,
is that a lot?
well, I'm just saying there's a difference between the market that we
Is that
talk.
good?
The
Is that
market we
good?
talk, yeah, it is. The market that we talk about here. I want to make sure we know where it's at versus what people are saying. So right now, my advice to people on the far end of the spectrum is, shop it and use this information that we're giving you to shop it. Now, I have seen a lot of people in the Southeast. Pine's still been pretty fluid, right? We've been still moving. People are covering jobs in Southern Pine right now. And if they're not putting them on the ground at this job site, if they're putting them into storage. I think 4 inches are probably a little overvalued here, but it's still probably pretty good with treaters this time of year, right? And 6 inches probably a decent price.
So 4 inches not as overvalued as it ever gets.
Yeah.
But it's currently at a price that would is in the range where it's an advantageous forward sell.
That's a good point. I don't know where I was going with that, but yeah.
Well, most likely what you're seeing right now, as you look at the second half of the year, spruce is undervalued. Hem fir and inland white fir and yellow pine are overvalued in comparison, right? So you've got like a hemlock is 50 over spruce, inland white fir is 100 over spruce, and yellow pine's 150 over spruce. You would expect those numbers to equalize. Well, I think that those numbers will stay kind of where they are now, and then the spruce numbers need to come up to sort of match that. Does that make sense? My way of thinking is that spruce spruce twin betters now skip along where number 3 prices are. So in my career, if I'm buying twin better at the number 3 price, I just ignore number 3 and I just buy more number 3.
So
and before we sign off, we've gone over because we missed a week, I know, and it's always great to be back with you guys. Just a little tidbit I'll throw out. If we look back at what's happened so far this year, following each of the last 2 expirations of futures, the market has had a rally. I'm not saying that's going to happen again, but that's been what the trend has been so far this year. And if it expires again in the 330s like the last 2, I would anticipate the same to happen again.
How much did it rally?
Well, January rallied $170. So March went up 170 after January expired. Like, it's in the process between expiration and what its ultimate high was. I'm going to say, without pulling the chart up, I'm going to say that March went like $80 or $100. And May went $80 to $100 over March.
Gotcha. Okay.
So, we're looking July. July right now is a $40 premium to May. We do have it like the switch from old contract to new contract. So it's going to be interesting to see how that plays out.
Is it starting to get open interest over into the new one?
It's yeah.
Pretty good.
I think total open interest between old and new is about in line with the low level that we've been at. The question is whether it's going to be able to, grow. But the more people that participate in it makes it a better vehicle for the industry as a whole.
I'm telling you, if you haven't been participating in lumber futures this year as a basis trader / hedger, you've missed a great year, right? We've been consistently given big discounts and big premiums to either buy and forward sell or sell and hedge our inventory. Yeah. And I remember years where futures and cash basically did nothing. They just kind of pancaked all year long, and there's no angle there. Well, this has been a phenomenal year for lots of different angles. It's been fascinating, actually. So.
Absolutely.
Well,
Hey,
appreciate it, guys.
always great to be on with you guys. Let's go. Everybody continue to support the platform.
Yeah.
Yeah,
Right.
and Butch, thank you for the shirt. I appreciate that. If it fits me, I'll see if we can maybe get Matt and Greg one. All right, guys.
See you guys.
next week. Yep. Bye, guys.